Hi traders, welcome back to the channel. In this video, I'm going to take you through my 3-step method to finding trading opportunities. I know that the channel is usually about bringing you big macro stories and macro elements to the market, but in this video, I'm going to show you how you can actually implement it to find a possible trading opportunity, something that I am particularly looking for personally. I'm going to show you my method of how I find opportunities within the markets. Now, I use a 3-step method and it's called the WCS method, or that's how I've coined it anyway. And W stands for why. Why do I want to be in a market in the first place? I think this is so important to understand. It doesn't just help you in terms of finding opportunities, but it helps you with confidence, helps you stay in a trade for longer. It helps with every aspect of your trading. The second one is conditions. Do the conditions match your why? This is so important. I think it's very easy for people to just go, oh, well, you know, this market in particular should be going short because it's hit this trend line resistance, it's hit this major resistance point, and it should go lower. That's not how currency trading works, essentially. So, you know, just using technicals on their own, I don't think are enough, but it's important that the conditions match the why. The third then is a strategy. Yes, you have why you should be in that market. Yes, the conditions match. But how are you going to try and get the most out of that market? How are you going to implement a strategy that is going to be or make you more efficient to get the most out of it, right? And that's the hardest part. The hardest part is the strategy, or some say the easiest part is the strategy, because making a strategy is the easy part, but making it more efficient is the hardest thing. So I built this method myself. The reason why I built it myself is because I needed focus within the markets. I was very much just scrolling through the charts, looking for technical setups, and I always felt that there was more to the market. So for me personally, I came up with the WCS method to overcome that, and it helped me tremendously. So I'm going to show you today a market that I'm interested in, how I'm going to break it down. We're going to look at the why. We're going to look at the conditions of that market. So that means we're going to show some technical analysis today, which I don't think has been shown on the channel for a while. And I'm going to show you a strategy that you can use to try and take advantage of that market. So, drum roll. The market we're going to be talking about today is pound yen. Okay, this is a market that I feel is potentially going to continue to trade lower. Okay, so let's just quickly go and have a little look at pound yen first from a technical basis. You can see I've got my screen recording going on here as well, so I can show you the charts at the same time. Now, pound yen found resistance up at this 197.50 handle, and we've been trading down ever since. Now, the reason why this is because the pound is weaker than the Japanese yen. And it's as simple as that. That is why currencies move. One currency is stronger than another. That creates a trend in a market. But how do you spot the trend? How do you know that there's a potential trend coming? Well, that becomes in conditions of the why. Why should we be focusing on pound yen in particular? Now, there's a few methods that I like to use. As I said before, and you know, if you're familiar with the channel, we have a macro background. So what is going to cause pound yen to move lower? Now, tomorrow, or by the time this video comes out, GDP data would be out, okay? So the gross domestic product in the UK would have come out at 7 a.m. tomorrow. You're probably seeing this video at 3 p.m. UK time. So why am I interested in GDP? Well, this is because that's where the Bank of England have been focusing in their comments recently. They've been talking about growth. And in their previous meeting, they slashed growth in half from 1.5% to 0.75%, which is very, very interesting because a lack of growth means that the economy isn't going to be performing that well, okay? And in that sense, if there is a lack of growth, there's a lack of demand within the market. And when there's a lack of demand for goods and services, prices fall. Now, if prices fall, that means that inflation will be moving lower. A central bank will usually cut interest rates if we start to see deflation, which is basically the cost of goods and services coming in lower. So in that case, we could make an assumption that the Bank of England could be potentially about to start cutting interest rates. Okay, so that's something that we need to keep our eye on. We need to keep an eye on GDP. The second thing we need to look at is, because we trade currencies in pairs, we have to look at the opposite side of the coin. So yes, we've got this picture now of why we should be looking at potentially pound short, and I'll show you some more evidence of that as well. But then you've got the Japanese yen. What is happening in the world of Japanese yen at the moment? Well, if we just head over to Trade and Economics, okay, and I'm going to go to the inflation rate, and we're going to come down to Japan's inflation rate, okay, which has been climbing. It's been climbing. It's now at 3.6%. That's the highest level in the past year. If we go over to 3 years, that's the highest level since January of 2023, where we were at 4.3%. So inflation is climbing in Japan. How are the Bank of Japan going to deal with this? They're going to deal with this by raising interest rates, okay? So what you can do over on Trading Economics, you can come over to indicators, go to interest rates. We can go to Japan, who tops the list at the moment, and we can almost go to this area here, which is forecasts, okay? So it's going to use their macro models to predict where interest rates could be. Now, Trading Economics is predicting that by December of 2025, the Bank of Japan are going to be at 0.75% interest rates. But why is that important? It means that they are increasing interest rates because they're trying to prevent inflation from skyrocketing, okay? That's what they're trying to do. They're trying to dampen down demand. Now, when inflation rises and a central bank increases interest rates, it means that there can be some foreign capital flows into that currency. And the Japanese yen could feel some benefit from that, okay? So we've looked at the pound side of it. We've looked at the yen side of it. Pound should experience some weakness. Yen should experience some strength. How can we go a little bit deeper? Well, one thing that I like to do is currency strength and weakness analysis. I build a currency strength meter that I've been doing for the past 4 or 5 years based on a scoring system of trend on all sort of currency pairs. So what I do is I give the pound a scoring system, I give the Japanese yen a scoring system, and we can see that both currencies are technically in a top area. You've got pound that is at +4, okay, and you've got the Japanese yen at +7. But if I then go over to this area here, which is basically a map of how currencies getting stronger or weaker over a set period of weeks. When I look at the pound, which is the orange line, we can see that it's up at these highs in here, around about +6. Now, that means that the currency is strong. However, it's also could be in a point where it's overbought, and we started to see some selling coming into the pound now. So there could be potential now for a little bit of selling of the pound. When I look at the Japanese yen, which is the white line, it is a strong currency. It is the strongest currency at the moment. It's got +7. So out of the G7 currencies, it is the strongest currency. So from a sentiment point of idea now, I've got the idea that, okay, pound is a little bit weaker, Japanese yen is a little bit stronger. Another factor we can build into this as well is seasonal analysis, right? So I was looking on Seasonax. I wanted to take a look at pound yen over a 25-year period, and I can see that between the 21st of February to around about the 16th of March, you can see the details in the top right hand corner there, we have a 68% win ratio over 25 years. So that's 17 winning trades, 8 losses, and that usually comes in this February to March period, okay? Now, the only downside to this is when I put the 2025 overlay on, we can see that prices already started to sell off. So that is a little bit of a problem for us, because what we typically see is a rally and then the move to the downside over a 25-year period. But seasonally anyway, in data, we can see that usually around this time there's a little bit of downside for pound yen. So let's go over to the chart, because it's all well and good knowing the fact that you've got your Y. Now we need to know what the conditions are, okay? So the Y is all those macro and sentiment moves together, okay? So I haven't even looked at the chart really yet, before going into it, because the why I feel should be done away from the charts, because I don't want you to just form a bias because of what you see on the chart. The second thing I do then is the conditions of that market. Is the market in flow with the why? So I want to see pound yen downside because of the reasons we already stated. The conditions of that need to prove to me that that's correct, okay? So I can see that we found resistance on this weekly chart. I can see that the market closed bearish last week, and potentially there is support down at this kind of 186 handle down through here. There's also support down towards 180 as well, where we can see buyers have stepped in the past. So what I'm going to do now is just go to a daily chart, because I believe, in my thesis and in my theory, if the market is going to be bearish, we should see lower highs and lower lows. And that's exactly what we're getting right now, okay? We can see that the market started in at these swing highs, and it started to make lower lows and lower highs, okay? Then I like to look at the market in phases, okay? So the long move to the downside, I call it the primary phase or the impulsive phase. The shorter and the pullback phase, I call it a secondary phase. So you have the primary phase, secondary phase, primary phase. We're in the secondary phase now. Now, in a secondary phase of a bearish trend on a daily chart, you will notice that on a lower time frame, you get a bullish trend. So if I go to the hourly chart right now, you'll see that price is technically bullish, okay? It is making new highs, so it broke all these highs in here and is making higher highs, higher lows. I don't want to see that if I want to get short, but what it can give me is some conditions to say, okay, well, pound yen at the moment is technically in a downtrend on the daily chart, but it's in the secondary phase. I need it to change from the secondary phase to the primary phase for me to be involved. I'm not just going to go and short it, because that doesn't make sense. What we can do is obviously add technical factors into this. So I'm just going to go to a 4-hour time frame and just have a little look at where there could be some potential turning points. So looking at this area here, for instance, there was a nice period of consolidation around that 192.50 area before seeing some very aggressive selling coming away from that. So arguably you could say, is that a little bit of like a supply zone up here? And if that's the case, can we do business with the market if it gets into that area? Absolutely. One thing that I'm going to be watching is this hourly chart. I want to see the hourly chart change trend. So at the moment, we've got higher highs and higher lows. If price comes into this level here and we see a break in that trend, the market begins to make a new low, I will be then looking for shorting opportunities, because that to me is telling me that the conditions are now lining up, okay? The conditions are there. Then I need to apply a strategy, okay? So there's a couple of different strategies that you can use. You can use a price action strategy. You can wait for the new low to break. One thing that I like to look for are counter trend line breaks. And just to kind of show you what that would particularly look like, let's take a look at what happened previously when the market did begin to change a trend. So essentially the market consolidated, it broke out. This is where we began that new trend when prices closed below this low. All I wait for is a pullback. And again, what is that meaning to me? That is a primary phase, okay? When the market starts to pull back, that is a secondary phase within the market. I'm looking for the secondary phase to turn into the primary phase. So one thing I can look for is a break of that CTL there, that counter trend line, which would be this candle short here. Market trended to the downside. The second way we can look at it is by going even lower onto a 15-minute time frame, because it's all fractal. Okay, it's all fractal. So I'll be looking for the 15-minute time frame to break into new lows, and it just gives you a little bit of an extra entry. Okay, so for instance, this would be the low. Okay, you see that the market made a high, higher low, higher high, higher low, higher high. That breaks there. That would be my entry point into the market once everything is lined up. Okay, once everything is lined up, that would be my entry point, and I'll be looking to target, one would be a major level of support, and then I'll be looking to drag my stop loss in line with these lower highs essentially, and I'll probably be managing it more on an hourly chart at that point. Okay, so I'm looking for pound yen opportunities to the downside. Target wise, I like the idea of going towards this 186 handle, but I'm going to do it by using that 3-step method. The reason why I use that is because it keeps me out of trades that might not be going in that particular direction. So let's say pound breaks through these highs, starts rallying, creates a new condition where we have a higher high on the daily chart. That condition does not meet my bias anymore, so I walk away. Okay, I walk away and I leave that chart alone. I go and find something else. Okay, or go and think about what markets could be moving. So I know this video was a bit longer than you're usually used to on the channel. This is my 3-step WCS method to help me find opportunities within the market. One opportunity I'm looking for at the moment is pound yen. Let me know your thoughts on the method in the comments down below. I look forward to hearing your feedback. Let's see in a couple of weeks' time, does pound yen continue to the downside? Thanks for watching, and I'll catch you in another one.